If you've saved for retirement in a tax-deferred vehicle, a 401k or an IRA, you've made a big bet that your taxes will be lower in the future than they are today. But will they be? And what happens if your taxes are higher than expected? Now, there are three key ways that your taxes could be higher in retirement than you expect. The first is if brackets were to change. Now, we actually know that in 2025, the federal tax reform, sometimes called the Trump tax cuts, are set to expire, which means that in 2026, tax bracket rates are going to revert to their older, higher pre-reform rates. That means for many of us, we may see our tax brackets higher in 2026 going forward than they are today. Now, brackets are the most common way most of us think about taxes changing, but they're not the only way. The other way our taxes could change is if our deductions change. If I make $100,000 a year and can deduct $20,000, I pay taxes on $80,000 of taxable income. Well, if Congress changes the rules and suddenly I can only deduct $10,000 a year, suddenly I'm paying taxes now on $90,000. My bracket didn't change, but I am definitely giving more of my income to the IRS in the form of taxes. The third way that taxes could change in the future is through new or adjusted taxes that Congress may implement. This could be anything from new ways that assets are taxed or changes in how much of an asset is subject to taxation. A good example of this is Social Security. Currently, a Social Security benefit is taxable up to 85% of that benefit, depending on your income. But it wasn't always that way. Congress had to pass laws to first bring the taxable portion of Social Security up to 50% and later up to its current rate of 85%. But Congress could pass a new rule tomorrow and say 100% of Social Security is now subject to taxation. Again, that wouldn't necessarily change your tax bracket, but it would certainly change the amount of income subject to taxation within your retirement approach. Now, tax risk is one of the largest, potentially least understood risks that most American savers face. So if you have concerns about your taxes being higher in retirement than you expect, please be sure to make an appointment with your financial professional to discuss what your potential retirement tax bill might be and discover any potential approaches you might have to mitigate that tax bill that could be coming your way in the future.